Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, then subscribe to my YouTube channel for regular market analysis. And you can also check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the chart of Euro USD, and as you can see, I'm in my favorite 4 hours time frame. As we all know, there was a sharp fall in the Euro USD chart. Okay, we can see that there was a huge sell-off on the Euro USD chart, and the main reason behind this big red candle is this. Okay, see, Euro USD tumbles to 1 month lows near 1.2040 after FOMC statement. Okay, yes, there was an FOMC meeting, and you can see that uh, the Federal Reserve keeps monetary policy unchanged. No mention of tapering raises inflation expectation. US dollar rises sharply across the board. Okay, this is the main reason why there was a sharp fall on currency pairs like Euro USD. Okay, because dollar became very strong. See, this is the currency strength meter, and just look at the position of dollar here. Okay, this is the US dollar, and just look at the strength of dollar. It's standing at 6.9, and just look at the strength of euro, GBP, or CHF. Okay, in comparison to other currency pairs, dollar is standing tall. As a result, there was some huge sell-off. Okay, and FOMC statement or FOMC meeting was the main reason behind it. Okay, so let's get back to the chart again. So ultimately, our chart, chart became messy. Our levels, our levels are gone now. Okay, previously we saw that market was in a downtrend. Okay, market was trading in a downtrend channel. Okay, taking support at this trend line, and market was getting resistance at this trend line. Okay, it was quite easy for us to understand the market when market was following a downward channel. But right now we can see that market is trading below this channel, or market is far away from this channel. So as a result, this trend line is no longer a valid support to us. Okay, and and I'm not going to talk about the resistance now because the resistance is far away. Okay, this line is far away from the current market price. Okay, and if we look at the overall chart of the market, okay, if you look at the overall chart, then right now we can see that yes, there is a possibility that the trend has reversed on Euro USD chart, because in my earlier videos also I mentioned that until and unless we get an inverted V pattern, we cannot consider it as a trend reversal. And right now, after the FOMC statement, okay, we can see that yes, we have the inverted V pattern in front of us right now. Okay, so should we go ahead and sell the market right now? No, this is not the ideal position to short the market also, because see, after this huge sell off, okay, market will try to take risk, market will go up a little. Okay, and if you short the market here, then as I always say, okay, you should find the area of value. And if you short the market here, your risk to reward ratio also does not match. You will be compromising with the trading discipline. This is not your area of value. Okay, so I'll be discussing the strategy. Okay, before discussing the strategy, I would like to take you to the weekly time frame once. So this is the weekly time frame. Okay, and you can see that in the weekly time frame, okay, weekly time frame, market is moving in a swings. Okay, market is moving in a swing, and the good news is that, okay, good news is that we have the 50 moving average coming up as this support. Okay, as 50 moving average or any moving average is a dynamic support, therefore I cannot give you the exact value. But in your trading platform or in the charting software, just go to Euro USD chart and apply the 50 moving average, simple moving average, and go to the weekly chart. Okay, and there you can see that 50 moving average is coming, and there is a good possibility that 50 moving average will provide support to the market, because previously when market touched the 50 moving average, it provided support to the market. Therefore, Okay, therefore your first trading opportunity on Euro USD chart is the 50 moving average on the weekly chart. So just apply the 50 moving average on your charting software, okay, and just keep your eyes on it, because you cannot set the alert because there is no exact value to it. This is a dynamic support. Okay, so 50 moving average is your first trading opportunity on the Euro USD chart. If you see the market has bounced from the 50 moving average, you can go for a buy order. Okay, and for the second trading opportunity is after after this huge sell off or this huge red candle. Okay, the only trading opportunity for you on this chart is wait for the market to go up, and when market will go down again, okay, you can short the market. Because see, right now though market is in oversold zone, but still you can see that there is not much trading pressure. And just try to understand the market psychology here. Okay, overall market was already trading in a downward channel. After that there was some huge sell off. USD became very strong, US dollar became very strong. So there is no point of looking for buying opportunities. If you go for buying opportunities, then it will be very risky. If you are an experienced trader, then you can go ahead and take some risk. You can go for scalping. Okay, but if you are a beginner, if you cannot afford to risk any money, then this trade is not for you. Okay, do not go for any buying opportunities. Okay, the second trading opportunity that you may get is this level. Okay, as we all know, okay, support becomes resistance in the market. Okay, so there is the second possibility is if market goes up from here and gets resistance at this particular trend line. Okay, because right now we can hope that, or there is a possibility that this red line or this trend line which was acting as a support for the market will now become the resistance. And when market will reverse from here, okay, then you can short the market. Do remember, confirmation is always important. Okay, confirmation will be in the form of price rejection from above or a shooting star pattern or red candle. Okay, once you see that prices reverse from this resistance which was the support previously, you can short the market. Okay, and third opportunity is wait for the stochastic RSI. Okay, right now it is in the oversold zone. So wait for the stochastic RSI to go to the overbought zone. So when stochastic RSI will be in overbought zone and it will be going down again, okay, like this, because it is an oscillating indicator, it will go down again. So when stochastic RSI will be going down again, just see how the price is doing. Just try to understand the market psychology. Just try to read the market emotion. If you see that stochastic RSI has reached the overbought zone and market still does not have the required strength. If you see that yes, market is still being dominated by sellers, the bears, then you can short the market. Okay, and you can, this is the 4 hours time frame. I am doing this in a 4 hours time frame. You can apply the same strategy in the 1 hour time frame as well. In the 1 hour time frame also, okay, market see, market is flat, stochastic RSI is going up, okay, trying to go up, but still market does not have the required strength, and it is quite natural. Okay, after this huge sell off, USD is so strong, euro is so weak right now, so it is quite natural that bulls does not have the required strength. And when stochastic RSI will be going down again, you can short the market. Okay, so this is the strategy that you can follow for euro USD as of now. Okay, things have changed, levels have changed because of the FOMC meeting and statement. So this is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow.